Hey everyone, and welcome to Public Live. I'm your host today, JD Durkin. Feel free to check us out on Spotify at The Public Podcast or over on YouTube at Public Invest for more in-depth interviews to help keep track of your portfolio and, of course, to help keep your portfolio on track. Today, we're digging into AMC's latest move to tap into additional cash as well as to reduce debt. AMC held a special meeting of shareholders and its proposals passed by nearly 90%, with over 70% of common shareholders voting for. AMC investors approving a 10-to-1 reverse stock split, as well as a plan to convert APE units into common shares. Shares closed down by about 16% in the session following the news. With us to discuss and to better understand exactly what's going on here is Alicia Reese. Alicia is Vice President of Equity Research at Wedbush Securities. Thanks a lot for being here, Alicia. It's great to have you.
Yeah, thanks for having me. Appreciate it.
Of course, let's start with a little bit of background on what happened and how we got here for people who might be more or less hearing about this for the first time.
Sure. So AMC had actually issued their special dividend preferred shares early last year, along with its Q2 2022 results. And since they've actually used the APE shares as a vehicle to raise cash, they've issued quite a few shares since then. And at the last count that we have, it was nearly 930 million shares of APEs versus AMC's just over 500 million. And so they've used that to raise cash, but the issue that has cropped up is that the APE shares have traded at a significant discount to AMC shares over that time. So it's not as helpful to AMC to issue those shares as it would be to issue AMC shares. So they figured, let's propose some ways that we can rectify the situation. And so really what they wanted to do was convert all of the APE shares back to AMC, do a reverse split 10-to-1, and then ask if they can issue even more shares. And so that's what they did today, and shareholders overwhelmingly passed these proposals. So the issue here that we saw kind of going into it, and there was a bit of noise around. Allegheny County Pension Fund sued AMC a few weeks ago, alleging that AMC issued the APEs and that circumvented the shareholders' will. Now that's supposed to come to a judge late April. But the fact that these proposals passed so overwhelmingly, like I said, almost 90% of shareholders passed this. And if you just look at the, AMC common shares, as you said, it was over 70% passed these. So I don't think there's as much weight to that argument, given, how much they passed. So the only thing that we would we have some lingering concerns there is that if they allege that the initial issuance of APE shares was circumventing shareholders' will, that could be an issue still. They could go all the way back to that, but I'm not sure how they would track back all of this activity over that time. It's quite a bit has happened since then. But at the end of the day, go ahead.
Yeah. Oh, no. Please can finish before I move on.
Okay, so yeah, at the end of the day, right now we have 1.4 billion shares outstanding between AMC common shares and APEs, and when all the dust settles, it'll be 145 million of shares, and AMC will have 550 million further AMC common shares authorized to issue. So a lot more cash they can raise. We'll see where shares settle. They both dropped quite a bit right now, but you have APE shares that are trading still at a significant discount. So buy APE shares now at the effective date of the conversion, trade them for AMC shares, hold or sell as you wish, and you can make a little money on that.
Sure. To that point about Wall Street's reaction, why has it, do you think, been so negative? And what's your best sense on what happens next?
Well, I think the negativity is primarily around AMC issuing more shares and diluting the shareholders further. AMC will need the cash. They still have a mountain of debt to repay. They've made, significant payments on that debt over the last year. They plan to continue doing so, just to better position themselves. But they're just trading equity for debt here. And the lower their share price goes, the more expensive that becomes. But they need to also fund growth. I think it's not as worthwhile to expand their footprint further. But as they're expanding it, they're doing it in a reasonable way. They're closing some theaters that are underperforming and only purchasing new theaters that are high performing theaters that will increase their ASPs and overall metrics.
Sure. I'd love to talk about this tweet thread today. This comes from AMC CEO Adam Aron, said today it was a huge step forward for the company, adding that saving AMC is his professional mission. You, Alicia, you have an underweight rating as well as a $2 price target, if I'm not mistaken. Does the proposals passing make you any more confident in the viability of AMC as a business or its ability to keep its head above water in the long term?
Yeah, absolutely. It just the fact that they passed so overwhelmingly gives more confidence that this lawsuit is not going that no, it's not going to hold water. Nothing's going to happen with it. So this just says AMC is going to have the ability to raise more cash to do what it needs to do. I I'm not going to say that our underperform rating has anything to do with the merits of the business or the merits of the industry rebounding, because we think both of those are fine. I think the AMC has done an excellent job, not only staying in business through the pandemic with that significant debt they had by various means. They're poised to grow along with the industry over the next couple years at least. So, the only reason that we have our underperform rating is because, valuation is very rich compared to, all the other companies in the business and compared to how it's historically traded. So, it's just fundamentally based, valuation based.
It sounds like you do have a fair bit of confidence with regards to the overall theatrical environment or specifically the content slate for the rest of the year.
Yeah. Yeah. So right now we're estimating, and I think it's from a pretty conservative start. Um, we're estimating the 2023 box office North America to end up about 17%, call it a bracket 15 to 20% up year over year. And that's 75% of 2019 box office. And as a reminder, 2019 box office wasn't just pre pandemic, it was, the year of Avengers Endgame. This is a big box office year. 2018 was a record breaking, 2019 was just below it. So, 75% of that in 2023 isn't bad, and it's trending higher on a per film basis. Each individual film that has performed really well has outperformed a lot of titles pre pandemic. I mean, look at Top Gun, Avatar. These are really performing wildly in the current environment. People are going back to the theaters, and I think what we're seeing in that shortfall, that 75%, is primarily the volume of content. So we're not getting as many titles to the theaters as we used to, and that's primarily a function of just production delays during the pandemic playing out now. It takes 2 or 3 years to get a film to theaters, so those production delays. That will have, I think most of that has passed. So we're getting through the the tail end of that in 2023, and that normalizes in 2024 and 2025. So I think we're definitely poised to grow. And people are buying more concessions, and that's an extremely high margin segment for the theaters. I think they're on decent footing. People are going to premium large format as well. IMAX is really well positioned here.
That's interesting. I mean, that kind of goes hand in hand with a lot of the general consumer spending storylines that we cover in the economy with regards to little nuances and the data points we track. I'm sure all of the names you just mentioned would love if there were another Avengers Endgame that could be released this year. And I say that as someone that just rewatched it for about the 10th time a couple of nights ago.
I
It's
hear
going to
you.
be tough to replicate that success with the new era of Marvel. But regardless, a point very well taken about
Sure.
2019 and some of the strength we've had in names since then, including Top Gun Maverick, of course. Relative to competitors, I wonder, Alicia, how is AMC positioned to capitalize on what is, as you seem to describe it, a bit of an improving environment?
Sure. So there are a few puts and takes here that I think are worth mentioning. So AMC has the largest footprint of premium large format screens, and a lot of their a large percentage of their theaters are in high performing DMAs, urban DMAs, New York, LA, various other cities. And so they have the capability to draw really, high per screen averages and high ticket prices. They're doing a lot with concessions. They're opening more theaters in, really strong DMAs. They're also poised to rebound in Europe whenever that happens. That could be a source of weakness or a source of strength, depending on how certain films play in the region. I think there's some pent up demand there that could help rebound for them, but that really remains to be seen. Um, all that being said, that's the industry, the environment, but they do have more debt than competitors that they have to address, and so they'll probably be by far the last of the theater companies to revert to paying a dividend. And for a long time, that's what investors in these companies have paid for. They're not high growth businesses. These are, this is a mature business. They're not, growing their theater footprints very rapidly. IMAX aside, IMAX is growing internationally at a pretty high clip. But AMC is still issuing shares. I think eventually we'll get to dividend payments by the rest and share repurchases, and AMC will be lagging in that arena.
Absolutely. What are some of the new revenue channels? You mentioned concessions in a couple of responses ago, and I was struck by, because I think when we oftentimes think of the theater space, where you have the conversation about AMCs, many of us that loosely cover it, not nearly as closely as you do, of course, might think, oh yeah, of course, there are other parts of the business other than just the films themselves. So what are other revenue channels that could pay off for AMC? And are there any that are already showing pretty promising growth, or others that you might be pretty optimistic about?
Well, yeah, AMC has they've started a variety of new businesses. I think the only one I'm really positive on at this point is the alternative content, and they're not the only ones doing this. IMAX is doing a great job with that so far. Cinemark is doing it as well. I think everyone in the space is smart to really be driving into this. And what that means is, because of that, the lower volume of content that's coming to theaters right now, and kind of you're seeing like a few more holes in the release slate than you used to. What they're doing is they're driving people to theaters to watch concerts or other types of um, live events like that. I think they'll probably add comedy shows to the mix over time. There's a lot that they can really add. It's a great format to see something live, but without kind of the madness of crowds, perhaps for some that's appealing. But also just to engage in a live event that they couldn't otherwise make it to in a venue with really premier sight and sound. So it's a promising endeavor. I think there's a lot more they can do with it. They're also doing like live esports events. That seems like a really interesting venue for that. It makes a lot of sense. They've been kind of pushing that forward for a long time, but I think there's a lot more room to grow for the theaters on that. Some of the other endeavors like buying the mine and Zoom meetings, I think have a less promise personally.
Sure. Yeah. I don't know. I'd have to think about whether or not I would personally would ever go to a movie theater to watch like e-gaming or something like. Yeah, I mean, I guess I would. Why not? I mean, listen, for a lot of those things, you want a crowd of people together. What better than a movie theater environment? And if that's a path forward, listen, all these companies, AMC included, always adapting, going to where, meeting the people where they are. And that's a great note as part of a great conversation. Alicia Reese is analyst at Wedbush Securities, talking all things AMC with us on the day. Alicia, thank you so much.
Yeah, thanks for having me.